Today, we're going to try and make sense of a global economic map that is, well, it's being completely redrawn right in front of us. The old trade routes are shifting, new players are stepping up, and the rules of the game, they seem to change by the minute. So let's dive in and explore how all these shifts are creating both some major challenges and some pretty incredible opportunities.
Right at the heart of everything is global trade. It's this incredibly complex dance of ships, planes, and trucks that brings us everything from our smartphones to the food on our tables. It's really the invisible network that powers our everyday lives.
So, what happens when that whole system gets shaken up? When the routes you've always known are suddenly blocked, and the rules you've played by for decades are just tossed out the window. That's really the core question we're looking at today.
To really understand this new map, we've got to look at the new rules of the road. We're living in a world of shifting alliances, and it's all defined by this constant push and pull between tariffs on one side and treaties on the other.
It's funny, all the headlines scream about trade wars, but behind the scenes, there's a totally different story playing out. The number of trade agreements between countries has actually been climbing for the last 20 years. Nations are out there building new economic bridges, even while some walls are going up.
At the same time, though, those new walls, the tariffs, are having a very real impact. They're creating this immense pressure, and for some companies, it's just becoming the breaking point. It's the final push into some serious financial trouble.
And look, this isn't just some theory. It's got real-world consequences. Take iRobot. A 46% tariff on its products shot its costs up by $23 million, and that pushed it right into bankruptcy. Or think about Rad Power Bikes, staring down over $8 million in customs fees. It shows you that even if tariffs aren't the only problem, they can absolutely be the final straw for a company that's already struggling.
So how do the big players react? Well, they adapt. They have to. For a country like China, when exports to the U.S. took a hit, they pivoted. They started ramping up trade with Europe and, really importantly, with other emerging markets to make up for it. It's like we're watching a global rerouting of commerce happen in real time.
Okay, let's switch gears and jump over to the US market, because over there, one single incredibly powerful trend, AI, is creating this massive split. It's basically creating a tale of two different economies within the same market.
The concentration of power in the U.S. market is just staggering. That top line you see, that's the projected earnings growth for just 7 big tech companies. It's soaring past 20%. And the bottom line? That's the other 493 companies in the S&P 500, and they're actually trending down. It means a tiny handful of companies isn't just leading the market, they're basically carrying the whole thing on their back.
But here's the thing. All that AI glamour comes with a lot of volatility. Many of the biggest names have had these huge drops from their peak prices. Now contrast that with the, let's call them, boring businesses that are the guts of the AI revolution. I'm talking about companies that do data center support or even cleaning services. They're showing steady, reliable growth. It's a huge reminder that behind all the AI hype, there's a foundation of essential work that makes it all possible.
So, while the U.S. market is being driven by this one massive trend, other parts of the world are writing completely different stories. Let's shift our focus now to an emerging market that is really forging its own unique path forward: India.
India's position in all of this is pretty unique. You see, as other Asian countries have seen their tariff gap with China get smaller, which kind of levels the playing field, India remains a total outlier. It's operating in a completely different competitive zone.
And what's really remarkable here is that while a lot of economies are hitting the brakes, India's export engine is just firing on all cylinders. We're seeing strong, positive growth year over year in both goods and services. It's completely bucking the global trend.
When you put this in a global context, it's pretty eye-opening. India's projected earnings growth over the next 5 years is over 16%. That's more than double the US and 4 times China's. But what's maybe even more interesting is that its market is trading at a discount compared to its own history, while most other big markets are trading at a premium. Now, that could just be caution from investors, but for some, that signals a pretty big opportunity.
And this momentum is no accident. India is being really aggressive and strategic about its trade deals. Just this year, they've signed major agreements with the UK, Oman, and New Zealand, and there are even bigger negotiations in the works. They are methodically building their own highways for commerce.
All right, so let's try to put all these pieces together. What is this new economic map actually telling us? Where are the signs pointing for future growth?
I mean, when you compare the broad emerging markets index with China and India directly, the story couldn't be clearer. India's 5-year return has nearly doubled the rest of the emerging markets, while China's has been negative. And the earnings growth? The difference is just dramatic, 16.2% for India versus just 2.5% for the whole index. The numbers really do paint a very clear picture.
But, and this is a big but, you have to look under the hood at valuations. The overall story is strong, sure, but some parts of the Indian market look pretty expensive. The top 10 stocks are trading at a really high price-to-earnings ratio. But then you look at other sectors, like financial services, and they seem much more reasonably valued. It just goes to show you that it's a market where you have to be selective.
At the end of the day, trying to navigate this new global map really is like solving a huge, complex puzzle. An investor has to fit all these pieces together, growth, risk, big market trends, and valuations, to really see the whole picture.
And that leaves us with one final question to think about. In a world driven by these massive, obvious trends like AI in the US or the rise of India, is the smartest move just to follow the crowd and ride those big waves? Or is the real opportunity found by looking for that one crucial piece of the puzzle that almost everyone else has overlooked? That's the question for every investor today.